Hey, it's Clay Trader, and this will be a video chart on ticker symbol IRG. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this may look like several days worth of time right here, it's actually just today's price action broken down into 30-minute time slices. I like to this time frame. I think it does a good job of telling the quote-unquote story of the price. And in this situation, makes mapping out a very logical question quite straightforward. And that question revolves around the fact that today was a good, solid move. I don't think anybody can really sit back and argue against that. Yeah, the price made a good move today, but that does bring up the question, but is there any sort of true power behind this price movement? Is there any sort of genuine strength, or is this just some sort of knee-jerk reaction, dead cat bounce type move? I have no idea, but like I said, by using charts, we can make answering that question very straightforward. And in my mind, it all revolves around a single level, and that's why I love charts. Makes things very straightforward. And that level is down here at the 29-cent mark. Why is 29 cents so important? Well, hopefully we can all agree on the logic that price movements with genuine strength, with true power, the price is going to progress forward. The price is not going to go back to where it was. I'm assuming you're saying, hey, thanks, Captain Obvious. Of course, if a price movement is truly strong, it's not going to go back to where it was. So with that in mind, think about 29 cents. Any sort of closes below it, or worse yet, if the price separates to the downside, what is that doing to the price? That's putting the price right back to within this range where it already was. Again, going back, not a sign of true strength. Whereas let's say the price heads down here, bounces around, and then heads back up. What would you have in this situation? Well, you'd have a set of lows right here. You'd have this set of lows down here. If you picture each one of these as stair steps, well, hey, now you have stair steps progressing in the upwards direction. And again, that's the name of the game, right? Truly strong moves make progress in the upwards direction as time goes by. Now, preferably speaking, meaning, hey, Clay, what would make this chart look the absolute strongest going forward? If the price can hold up here above 35 cents, that would make the chart look the most appealing, but by no means am I saying 35 cents is a muscle level or anything like that. You know, the muscle level in my mind at least is down there at 29 cents for the reasons we just discussed. Now, what about levels of resistance? If this upwards move is going to continue, where are some of these potential battlegrounds at? Two key ones stand out. The first one, for whatever reason, in the afternoon, 44 cents, there was just some sellers that showed up there. I mean, the bulls tried on numerous occasions to get back up above there and just couldn't quite do it. So 44 cents going to be that initial area of resistance. Next key level after that, up there at the 49-cent mark. So all in all, though, very solid day. Now it's just a question of can the bulls build upon this momentum going forward? We shall see. One of the most popular questions I get is, hey, Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means, click right there to get access to the guide. The guide itself is very short and to the point. And like I say, it is free. Thanks for watching. Have a good one.